Okay, one more before we take a break. Now we're talking about Zeder. So really, we're sort of shunting around the world looking at totally different entities now. But again, this one has a performance fee inside of it. Zeder is PSG. That's the Cape-based, Stellenbosch-based Yanni Mouton investment group. It's their investment in the unlisted agricultural, seed, food and beverage environment. A very significant part of its NAV is in fact made up by a stake that it has in Pioneer Foods, which of course is a listed entity. Market capitalization of Zeder, which now reflects quite a big discount to its NAV, is now 8.8 billion rand. The PE ratio maybe doesn't really matter all that much. It's a sum of the parts type investment, but it is 47.93 and it has paid a few dividends, dividend yield 0.95. So let's go straight to the graph, because this one was a stock that did very well. Everybody loved it, you know, big success story, growing 7 billion people to feed, yada yada, but it's done badly in 2015.
So this is part of the PSG stable, and they take fairly rich fees.
Oh yes, tell us about the fees.
So it's 1.5% management fee. To their sort of credit, they run PSG run all the operations, so there's no other overhead. So I guess you could argue that's fair. But on top of that, there's a 20% performance fee above a hurdle, which is Govy plus 4%.
Okay.
So because the Pioneer
doesn't
Foods
it track the food and beverage index of the JSE or something?
No, so it's based on the performance fees based on the share price of Zeder itself. So it's really based on the share price appreciation. So yeah, they take 20% in a fee. And I guess because Pioneer's done so very well, and they reinvested in Pioneer and increased their stake in Pioneer.
But Pioneer did very well and shot to the moon, but lately has sort of tapped off a bit.
Yeah, that's right.
Which is reflected there
yes,
too.
Yes. So so it is somewhat of a proxy for Pioneer, but I think as the share price performance had gone up so much, investors became more and more uncomfortable and dissatisfied with the fee structure. Because the high performance, it was also the fees that had to be paid in cash, was putting significant cash flow strain on this vehicle, Zeder. So there's been talk about a restructuring of the fees as a result. And that's why there was a significant re-rating, specifically in the discount that it trades at.
Interesting. Look, apart from Pioneer, which is an interesting story because Phil Roux will presumably be working hard to re-energize that group, it's also got a big stake in Capespan. It bought out the minorities in that. It's got Cape Vin an interest. It's got some agricultural activities northwards in countries like Zambia and Malawi, I think.
That's right.
Then it's got a seeds division, but these are relatively small, I guess. So, you know, what do you think the likelihood is from here? I mean, the agricultural sector difficult at the moment. Lots of problems with commodity prices flying all over the show.
Capespan's the other significant asset. That is an exporter, grower and exporter of fruit specifically from South Africa into sort of Africa and other parts of the world. I think given that that's an exporter in the weak rand, that looks a little bit more promising. I think it's got a while to go and needs to improve its operational performance. But I think that has potential. The other assets also quite nice, African sort of seed operations, I guess, a play on African agricultural growth over time. Difficult at the moment, but I think will improve as conditions improve.
So hot or not right now?
I think it's a reasonable price. Hot.
Interesting. So you're inclined to dive in there just because it's come down. Interestingly, we did earn this one in the portfolio and we switched it out for PSG because we were a little bit spread it out, no cash, you know. Okay, I don't know. To me, that story still sounds a bit noisy, so I'm going to lean not hot.